Nuclear energy is finding its way back due to its sustainability in times when there is an energy crisis throughout the world. The Russian invasion of Ukraine and the following sanctions have disrupted the energy supply immensely. In addition to the global supply crisis, the increasing importance of the global goal of net zero emissions by 2050 has further enhanced the acceptance of nuclear energy. The increasing demand for nuclear energy means increasing demand for uranium. While the demand for uranium has seen a surge in recent months, its supply on the other hand is less certain. Thus, the increasing demand and limited supply of uranium mean an uptick in uranium prices, which will bode well for uranium stocks in the years to come. To help you capitalize on this burgeoning opportunity, we have compiled a list of the 5 best uranium stocks to buy for the long term. Coming first is a Canadian uranium producing company, Cameco Corporation, which is represented by the ticker symbol CCJ. Cameco is the largest publicly traded uranium company, and the second largest uranium producer in the world. With the increasing focus on nuclear energy, Cameco is preparing to capitalize on the changing landscape with its new long-term contracts. The company has already recorded £50 million in new long-term uranium contracts year to date, as of the end of the third quarter of 2022. With the ongoing contract discussions that are near finalization, Cameco expects the total volume of uranium contracted since the start of 2022 to be around £77 million. Moreover, the company's third quarter financials were beat on both revenue and earnings. Revenue came at $389 million, up 8% year-over-year, while net loss improved by 72% to $20 million. Net loss per share was 5 cents against the comparable 18 cents. The balance sheet remained strong with $1.3 billion in cash and cash equivalents as of September 30, 2022. In addition, the company has also begun initial production at its MC Arthur River and Key Lake facilities after its restart. Production in these facilities was suspended due to weakness in the global uranium market. But with the newly shifted focus on nuclear energy and increasing momentum in the uranium market, the facilities are now back to production. In short, Cameco is a great uranium stock to buy for the long term, and capitalize on the renewed love for nuclear energy. Coming next is another Canada-based energy company, Denison Mines Corporation, which trades under the ticker symbol DNN. The company engages in the acquisition, development, selling, and investment of uranium properties in Canada. Its flagship project is the Wheeler River Uranium Project with 95% interest. Moreover, the company has significant physical uranium holdings, and impressive amounts of reserves in its Wheeler River project. The project has an expected mine life of 14 years, with an expected production of 109.4 million pounds of uranium in its lifespan. The company plans to apply in situ recovery techniques in the project to extract very affordable uranium. Recently, Denison Mines successfully completed a long-term ISR core leach test with 97% recovery. This further supports the ongoing feasibility study for the ISR operations, which is intended for Wheeler River project. Additionally, the regulatory milestones are also progressing well for the project, with the final environmental impact statement submission in progress. In the third quarter of 2022, the company came out with revenues of $3.04 million Canadian dollars. The net loss in the quarter was $6.38 million Canadian dollars, with a loss per share of 0.01 Canadian dollars. At the end of the quarter, the company had cash and cash equivalents of $54.9 million Canadian dollars. All in all, with its Tier 1 status Wheeler River project among others, strong balance sheet, and regulatory achievements, Denison Mines is also a great uranium stock to own for the long term. Additionally, the shares come with an average price target of $2.31, which means a potential upside of over 100%. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Following next is a US-based uranium company, Uranium Energy Corporation, which is represented by the ticker symbol, UEC. It explores, extracts, and processes uranium and titanium in the United States, Canada, and Paraguay. The company is working on a high-grade conventional pipeline in Canada and US ISR production with 2 hub-and-spoke platforms in Wyoming and Texas, which are near production. In mid-October 2022, it completed the acquisition of the Canada-based Rough Rider uranium development project from Rio Tinto plc. Following the transaction, the company has no debt and $93 million of cash and liquid assets. This acquisition comes after the recent deals including Uranium One Americas and URG Corporation earlier this year. These acquisitions significantly increased the company's US and Canada production capacity, as well as total resources. Additionally, Uranium Energy received a renewed and expanded radioactive material license from the Texas Commission on Environmental Quality. This increases the company's Hobson processing plant's licensed production capacity to 4 million pounds of uranium annually. At the end of the third quarter of 2022, Uranium Energy's physical portfolio of US warehoused uranium was 5.5 million pounds. The average cost for the portfolio was around $37 per pound, with delivery dates through December 2025. The third quarter revenue was $22.95 million from spot market sales. Simply put, Uranium Energy is also a great uranium stock to add to one's portfolio for the long term. Coming next is URG Energy Incorporated, which trades under the ticker symbol, URG. Based in the US, the company acquires, explores, develops, and operates uranium mineral properties. It currently has an interest in 12 projects in the United States. The company is working on a full ramp-up of production at its flagship property, the Lost Creek project. Moreover, it is also carrying out various research and development projects for increasing the cost-effectiveness of Lost Creek. The company recently completed Phase 1 testing on its patented injection well casing and installation technology. The field tests demonstrated a massive reduction of 75% in drill rig time against conventional methods. Furthermore, it also showed an 85% reduction in casing costs. In the September quarter, the company completed a new multi-year sales agreement with a leading nuclear utility in the US. As per the initial agreement, URG Energy will deliver a base amount of 200,000 pounds of uranium concretes over a 6-year period starting in the second half of 2023. The agreement also calls for an annual increase in sale prices from the initial pricing in 2023. At the end of the quarter, the company had cash and cash equivalents of $39.9 million. Additionally, it also had roughly 324,000 pounds of finished uranium in inventory. Thus, with its multi-year contracts, exceptional R&D progress, and increasing demand for uranium, URG Energy is a stock worth considering for the long term. The last stock on our list is a Canada-based uranium exploration and development stage company, NexGen Energy Ltd, trading under the ticker symbol, NXE. The company acquires and develops uranium properties in Canada. Its assets include Rook I, radio property, and ISO Energy among others. The company has made some good progress in regulatory approvals for Rook I, which is the largest development stage uranium deposit in the world. The latest milestone was the review comments from regulatory authorities on its environmental impact statement draft. The company is now set to deliver the final ICE report in the first quarter of 2023. The project has an expected mine life of nearly 11 years, and will produce around £29 million of uranium a year. Additionally, its Ilitaro project has an expected operating life of 24 years. While the company has a strong asset portfolio, it is still a few years away from production. However, NexGen Energy's planned production from its assets could represent around 15% to 20% of global uranium production. Further, the company holds sufficient cash and current assets against its debts and liabilities, thus has a low debt-to-equity profile. Hence, the company has been rapidly gaining investors' attention this year, as uranium and nuclear energy see an increase in demand. Therefore, NexGen Energy is another stock worth considering in the uranium industry for the long term. That's all from us in today's video. We hope the insight we aimed to deliver was of meaningful value to you, and would allow you to optimize your portfolio for the upcoming surge in the uranium industry. We would love to hear your thoughts in the comments section below. If you would like to gain further insight into different stocks and investment strategies, check out our website, stockstelegraph.com.